Welcome everybody to the week ahead for financial markets. Mike Smith, head of client education trading, with you today to lead you around 5 things that may impact on market sentiment this week. I hope you've had a great weekend. Let's start it well by giving you some information that may be invaluable. So let's start by looking at markets as a whole. Of course, Friday's close was the end of another positive week on US equities, despite all the headwinds that remain in place, which we're going to talk about, of course, as these are the potential major sentiment movers this week. We've got earnings, we've got trade talks, we've got government shutdowns. All of those things may play into sentiment. Let's start off with the shutdown. We've got no sign of resolution. Healthcare remains a sticking point. The Democrats are keen to extend the subsidies available to US citizens for healthcare insurance. The Republicans aren't so keen, which will probably mean that we get a doubling of what most people have to pay. Of course, there are implications of that. One of the major ones is that there are data delays. Of course, we still haven't seen the non-farm payrolls, which maybe the current administration not too disappointed about. But this week we have got CPI due. I'm hearing across the news wires that it may be released on Friday anyway, which is slightly delayed. But of course, as we continue to see no resolution, markets may become increasingly unsettled if data fails to come out. US earnings season kicked off last week with the big banks quite positive, over 80% beat EPS expectations, and likewise with revenue expectations. Of course, forward guidance will be important, and we've only had 15% of the S&P 500 reported so far, so the ramp up this week is going to be important in terms of whether current valuations are justifiable. Keep an eye on that. And of course, one of the things we usually do on this session is put up a chart that we think is worth keeping an eye on. One of interest that we referenced last week was that of WTI crude oil. We talked last week about a potential retest of 4-year lows. That is now in play. As you can see on the chart, we put it on a weekly chart just so you can see the full picture. We did test these lows back here in May, but we have to go back all the way to March 2021 to see a breach of this level. So this level at around about $57 is critical. Of course, we could see a bounce off that again, but if we do breach it, it could precipitate some additional selling pressure. One to keep on your radar over the next few days. And of course, you can keep up to date with everything that's going on, not only in our live market updates that stream on YouTube on a Monday and Thursday, but also at our Inner Circle on Wednesday. This week, we're going to have a deeper dive on rare earths and the outlook for those. This has been a major point of contention between the US and China over the last week, of course. So it'd be great to see you there. If you can make it, streams on YouTube and on GoToWebinar either way. And remember, of course, our support team is ready and willing to help with anything platform and account related. We're there to take your call. And although we can't give personal financial advice on any specific position, we are here to make your trading journey easier. Have a great week. Trade safe and see you again soon. Bye-bye for now.